Hey, how you doing? My name is Roger Gitanga and I'll be taking you through the Chapter 9 Control, Security and Audit. Now, before we start, I want us to understand here that this chapter is so important because it forms the foundation of the F8 paper audit and assurance. And you would be very interested to know that the examiner will also want to test on this chapter because it will help you in your future studies. So I want us to be very keen even as we begin this video, okay? Now the very first thing we're going to be looking at is internal control systems. An internal control is any action by management to enhance the likelihood that established objectives and goals will be achieved. Now I love it when they say that it is an action by management, which means that the manager has to take it upon himself or herself to make sure that they're able to prevent, to detect, or to correct any error or fraud that might happen or occur in the company so that the company can be able to achieve their objectives and goals. Now, Turnbull guidelines. Now, before we start this slide, I want us to understand that Turnbull was the chairman who led the commission which came up with this report, and hence the name Turnbull report. So the UK's Turnbull report states that internal control consists of the policies, processes, tasks, behaviors, and any other aspects of a company that, taken together, will facilitate its effective and efficient operation by responding to the risks facing the company, or safeguard or protect the assets from inappropriate use, theft, or fraud, or at the same time help maintain the quality of internal and external reporting, or help ensure compliance with applicable laws and regulations. So the Turnbull report basically saw that internal controls are policies, processes, tasks, or behaviors that should be able to achieve this, should be able to achieve effective and efficient operations, or trying to protect their assets, or trying to maintain the quality of internal and external reporting, or just help ensure that there is compliance with the laws of the country. So you'll find that this is what an internal control is, according to Turnbull. Now, control environment and control procedure. We'll be looking at the definitions. Now, the internal control system consists of the control environment and the control procedure. Now, the control environment is the overall context of control, in particular the attitude of directors and managers towards control. It encompasses the management style, the corporate culture, and values shared by all employees. So basically, the control environment is the attitude of directors and managers towards the control. What do they feel about it? How can they change it? What do they want to bring in? So that is basically the control environment. Okay, what surrounds the control? Okay, then the control procedures are basically the detailed controls in place which help you to achieve the goals and the objectives of the company. Now, the elements of a strong control environment are that clear strategies of dealing with significant risks have been identified. If you're able to come up with a strategy on how you're going to deal with significant risks, then that basically shows a strong control environment. The second element would be that there is a communication to employees of what is expected of them. Once the employees know what they have to do, then they will ideally do it. And when they do it, it makes it easier for you to control that company so that people can be able to work with the aim of achieving the objectives of the company. 3, there is a presence of competent staff that is capable of achieving objectives and managing risks effectively. When you have competent staff, it means you have able staff, people who know what they're there to do, and people who know what to do in case something comes up. Okay, so that is a strong element of a strong control environment. Now, classification of control procedures. The first one we're going to be looking at, and this part is highly tested in the exam. Discretionary. Now, these are subject to human discretion. So what you basically mean here is that, for instance, for such a procedure to occur, a human has to do it. Like checking a signature on a purchase order is done by a human being. All right. 2. Non-discretionary. Now, these are provided automatically by the system and cannot be overridden. Now, overridden means that you cannot overwrite it. You cannot go against it. You cannot, let me say, crack into it. Once you give the wrong thing, you've given the wrong thing. It won't allow you to access, all right, whatever you're trying to access. So, e.g., like entering a PIN number at an ATM. If you put the wrong PIN, then you're not able to access your cash, or any cash for that matter. 3. Correct. Now, these are designed to minimize the effect of errors, e.g., backing up data imputed in a computer at the end of the day. So what we're trying to do here is that you realize that at some time when you back up your data, maybe something has occurred, right? You're trying to minimize the effect of the errors. So when you're working, what happens here is that even if anything happens, at least you have data. At least you still have that data that has been backed up in your database or in your server, and you find on your hard drive. And this really helps you because the error has happened, but which was maybe to lose the data, but at least you have a backup somewhere. So you've been able to correct it. You've been able to minimize the effect of the error that has already happened. Now, prevent. Prevent is basically, these prevent procedures are designed to prevent errors from happening in the first place. Now, I want us to be very careful that backing up data is not a prevent procedure, because backing up data is a procedure that is just trying to minimize an error that has the effects of an error which has already happened. So you see, with correction, okay, or correct procedures, the error has occurred already. But with prevent procedures, the error has not yet happened, and hence you're trying to prevent it from happening in the first place. So here you're trying to check invoices from suppliers against goods received notes before paying for the goods. So what happens here is that you've received the good, okay, and you've received the invoice, and you're just trying to confirm whether you've been billed in the right way so that you can prevent any error from occurring. Now, detect procedures are designed to detect errors once they have happened, e.g., physical checks of inventory against inventory records. So what happens here is that as you count it physically, you realize that maybe in your records you had 10 items of something, but as you counted, you found 8. So you realize that maybe a theft might have occurred, and you've been able to detect that. Now, types of financial control procedures. You're going to be looking at a specific acronym known as SPAMSOP. So S stands for segregating duties. When you separate roles, it means that you're reducing the power of one person trying to control everything. Now, what does this mean? Can you imagine if you're in charge of procurement or purchasing, and at the same time you're the finance manager? What you will do is that you'll be able to purchase things that are not really there and pay out the funds maybe to an account that you had opened for yourself. So no one really know that you're doing this because you're controlling everything, you see. So when you separate those roles, then unless this person, the two roles that have been separated, decide to work together, then you've ideally minimized the error from occurring. Physical, you can basically put physical locks to reduce theft. We have safes, we have keyholes. There are many ways you can lock up things, just to try and prevent theft from occurring. Authorize and approval. This happens in most companies where sometimes you'd want to authorize a payment, but if it is a payment of a significant figure, then you'd realize that it has to have been signed by someone, or it has to be signed by a senior who can ideally authorize such a payment. The next one is management. So we've already touched on the 4 spam. So management basically means to analyze and to review the accounts. So when he's able to do this, then he's able to detect error. Okay. Supervision. We say that when the cat is away, the mice must play. So if the cat is not away, the mice will not play, and hence you reduce the effects, okay, of any error occurring. Organization. Now, everyone should be aware of their responsibilities. Why organization is so important is because when you're organizing, it basically means that you're giving everyone a duty to do. And when people are aware of what they should do, then it will stop them from doing anything that is beyond their mandate. A, arithmetical and accounting. So just basically means that you should accurately record transactions to reduce the error from occurring. Now, personnel, hire the right people. Now, this is a bit tough because you're trying to hire people who have good ethical stance, people who are willing to take the company to the next level, people who have good of integrity. And this is very hard to detect on the first instance, but you can also be able to find ways in which you can detect such people with such characteristics and personality traits. Now, types of audits, we have the operational audits, management, efficiency, value for money. So all those names just basically define one type of audit. Now, they concentrate on the outputs of the systems and the efficiency of the firm. Remember, the word value for money focuses on three things: efficiency, economical, and effectiveness. Then a system audit, it tests and evaluates internal controls within the organization so that those controls may be relied on to ensure that resources are being managed effectively and information is provided accurately. That's a systems audit. So it just basically looks at the controls within that organization so that resources can be managed effectively and information is provided accurately. So there are two types of tests that are used during a systems audit. We have the compliance tests, which seeks evidence that the internal controls are being applied as prescribed, basically meaning that at least you are complying with how the internal controls have defined for you to do. So if the internal controls tells you to do this, you want to confirm whether you're doing it, hence to confirm whether you're complying or not. Two, substantive tests are used to discover numerical errors and omissions. Sometimes people might have forgotten to omit or have deliberately omitted a specific transaction so that they could hide a theft of some kind or a fraud. So you're able, if you do a substantive test, then you're able to discover such numerical errors. Now, the differences between internal and external audits, very important. Now, an internal audit are designed to add value and improve an organization's operations, but an external audit is an exercise that enables auditors, when you're saying auditors here, I mean auditors who do not work for the company, external auditors, okay, so that they can express an opinion on the financial statements. What do they feel about the financial statements? And then two, the internal audit reports to the board of directors or the audit committee, while the external auditor reports to the shareholders. The internal auditor's work relates to the operations of the firm, while the external auditor's work relates to the financial statements, okay? And hence they will try to go through the records that have come up with the financial statements. And the internal audit are very often employees to the company, okay? While sometimes they could actually be outsourced. But the external audit are appointed by the shareholders. They are not employees. They are independent of the company and its management. Thank you so much for listening to me, and I hope you had a lovely time. I hope you've been able to learn, and I wish you the very best. Thank you.